Moving on, let's now talk about what really came out of the budget as far as the FMCG space is concerned, and how exactly our company is gearing up to tap the potential that they are seeing in the next financial year. Godrej Consumer Products is one such company, because we did see an increase in the budget as far as the spending in social sector is concerned. So now Godrej Consumer Products is betting big on the rural segment in particular. They are going to be aggressive in terms of their new launches that they have planned, especially for FY16, and how they have big plans to increase the revenue percentage share as far as the rural market is concerned. I spoke to Mr. Vivek Gambhir, who's Managing Director at Godrej Consumer Products Limited, and when I asked him the kind of allocation that we have seen coming in the budget as far as the social spending is concerned, rural sector is concerned, how exactly is that going to benefit a company like yours? And this is what he had to say.
I think overall this is a very progressive and a responsible budget, and the finance minister has done a very admirable job of trying to check off all the major boxes, and if executed well, the budget will alter the growth trajectory of India in the medium term. As far as the FMCG sector is concerned, if the budget can deliver on the 8% plus growth that the finance minister talked about, that will certainly help drive incomes, and that will improve consumption, which is the need for the hour. In terms of, I think, rural consumers, the budget is very positive. In terms of urban consumers, the budget is neutral to slightly positive.
And how has been the demand so far as the rural sector is concerned? Rural wages, we understand they were lower in the last 9 odd months or so. So how did you see the demand faring out in the fourth quarter so far?
Yeah, rural growth definitely has been under some stress for the industry as a whole, precipitated by some of the pressures on rural wages. As far as our business is concerned, in the third quarter, our rural business grew at 16%, urban at 13%. So we still saw relatively healthy growth in rural, though the urban recovery has been sharper, while rural has been outpacing urban growth. We are seeing better recovery in urban. At the same time, we have launched a series of innovations that cater to the rural consumer. So in that sense, we are quite optimistic of rural growth going forward. Some of the unseasonal rain is something we have to watch for over the next quarter or so. But there are a lot of initiatives in the budget that augur well for the rural consumer, whether it be increase in rural infrastructure spend that will lead to more job growth, whether it is more subsidies, better targeting of subsidies. So net, I feel that while we have to watch out for the impact of the unseasonal rainfall over the next quarter, in general, this should be a very good year for the rural consumer.
So you're expecting this year to be a good year for the rural consumer. You also come out with some projects, Project Future Now and Project One Rural. Could you give us a sense of what exactly are these projects all about, and what's the strategy of the company?
With regards to Future Now, this is our attempt to align our structures and have our structures and capabilities in place to be prepared for the significant opportunities we see for growth in India. So what we've done is we basically have clusters in our international operations. We're now putting India into a separate independent cluster as well to drive tighter accountability. Along with that, I think with regards to One Rural, we are now going to focus on about 10,000 villages. These villages represent about 70% of FMCG spend, and so we will disproportionately allocate resources on these villages. We are also creating a separate rural marketing organization with dedicated people focused on rural activations. That will help us unleash the next wave of growth for the India business, with particular focus on rural.
Right. So, Mr. Gambhir, can you also give us a sense of what's going to be the growth outlook like for FY16?
At an overall level, if you look at the mix of rural versus urban, about 73% of our business comes from urban, about 27% from rural. We would like to change the salience of rural from 27 to 35% over the next 3 years. In terms of overall growth, we are working towards trying to get growth in the high teens.
All right, so there you have big targets as far as the rural space is concerned. Give us a sense of what's going to be your ad spend like in FY16. We did see slower growth in the last quarter. That was the third quarter of FY15.
See, at an overall level, typically our ad spends range between 10 to 12% of revenues. And we intend to keep that spend in that same range. The numbers might vary a little bit on a quarter-over-quarter basis, really based on the kind of innovations we're launching in that particular quarter. But overall, we will keep our ad spend between 10% to 12%. And because of the fall in commodity prices, we feel that we will be able to up our ad spend slightly while ensuring strong profit growth as well.
All right, and do we see that happening in the second half of this financial year, the next one?
No, I think in terms of our launches and innovations, we are looking at about 10 new innovations to be launched in India over the next year or so. So the pace of launches will start from quarter one itself, and then we will take a call in each quarter in terms of what the outlook looks like.
And are you also looking forward to entering into new categories as well?
It's going to be a combination of both launching additional products in our existing categories to extend and sustain our leadership in those categories. But over the last few years, we've also entered into new categories, whether it is air freshener through a brand called Air, a health and wellness platform called Protect. We've also entered the face wash category. So the focus will still be to primarily have innovations in our core categories, but over time we have been entering into adjacencies around these core categories, and we'll continue doing so.
And what's going to be the trend as far as pricing is concerned in FY16?
We will have to take calibrated calls in terms of when and how best to pass on some of the pricing benefits to our consumers. So for instance, in the soap category, where we have seen a reduction in palm oil prices, we have already passed on about 6 to 8% pricing benefit to our consumers. In some of our other categories as well, as we start baking in the effect of falling crude oil prices, we will look at passing some benefits on to our consumers. Typically when commodity prices come down, we do see increased competition, and so that may mean higher promotional expenses, but definitely there will be a certain amount of benefit passed on to consumers while ensuring better profit growth as well.
Right, and last question, Mr. Gambhir. Now we understand Freaka Hair acquisition has been completed. Any more such acquisitions that you are looking forward to?
So Freaka is a small niche acquisition. It really helps us improve our geographic and our product portfolio in Africa. Similar to the Freaka acquisition, I think we are very open to looking at other bolt-on acquisitions, whether it's in Africa, Indonesia or India, as long as they make the right strategic and the right financial sense for us.
All right, so there you heard the management of Godrej Consumer Products talking about their business outlook for FY16. We are slipping into a very short break right now. Don't go anywhere. The management of PC Jewelers is going to be with us after a very short break.